My name is Matthew Mocorro, and we are excited to be here with you this evening. Now, it's wildly important. I saw a lot of questions coming in already. Sound check looks like it's rocking and rolling exactly as we expect. So I'm going to be sharing my webcam as well. I like to make this a little bit more personal than just hearing my voice and seeing slides and seeing charts flash through. So I always like to bring a level of intimacy and knowledge to these types of events. So I want to make sure you're all good and taken care of here. Okay, so let's just make sure, I have to get this out. I think it's just a responsible thing to do. Trading the financial markets carries risk. That means you can invest and then you can lose. In fact, you can lose a lot. You can lose your entire account. Okay, obviously that's not the goal. So it's always important to only invest with risk capital, meaning money that if you do lose, you can still put food on the table, you can have a roof over the head and all that. So let's just make sure we're responsible. I know you are, but I've got to make sure, based on regulations, that you are aware, and I know you are aware, that trading carries risk, right? That's a known entity, known commodity about trading. All right, so do want to put that out there. So with that, I want to make sure, just do a quick sound check since I took control. You should be able to see a slide that says sound check. You should be able to hear me clearly, and you should be able to see my webcam going. Okay, so this is a live event. It is 7:03 p.m. Eastern Standard Time. So we're live and in charge. Okay, so this is actually my favorite time to trade. Many of you thinking, well, how are you trading now when the market's closed? Well, this is the best time in my opinion, because we can take a breath, we can evaluate what took place, and get set up for tomorrow. So I'm actually going to be giving you all a step-by-step checklist that's going to give you a system that requires no purchase. I'm going to share with you proven strategies, all for free. You don't have to pay for charting software, any type of technology to use what I'm going to share with you all today. And you're going to be like, are you serious? Well, yes, I'm going to give it to you right now. So I'm going to post inside of this chat box. I'm going to give you all access to this simple checklist. And then you can download it. You can save the link and use it whenever you'd like. So let me get this out to you. So in your chat box, you should see a message from me. Open it up, click on the link. It'll take you right over to this checklist. So this is what we're going to use as our guiding principles throughout today's event. So it's nice that now you can have a printable document if you choose to print it, or you can just save the URL and bookmark it, but you'll have access to this to help us throughout this process today. Some of this may be new to you. Some of this may be a new perspective on how to leverage these indicators, okay? Some of you have never traded. Some of you have been trading for decades, okay? So we've got a well-rounded group, but I wanted to provide this. And it's not only just finding the next stock breakout, but we're talking about how to trade options. So on the bottom half, we actually give you all of the specific steps to pick the best option to trade. Okay, so it's a complete trading strategy given to you. So I want to make sure you have this. Here's the checklist. You should see this in front of us. Okay, so if you can see that and you have it, type in a yes. I want to make sure everyone has this special checklist. So type in a yes. I want to make sure you're all good to go. Type it in that question section. Okay, good. Hi, King. Good to see you. All right, perfect. So it looks like we got lots of yeses, so that's perfect. Okay, fantastic. Fantastic. Okay, so this is what we'll be referencing as we walk through this strategy. Okay. All right, so this box is what we use. It looks like everybody found it. I've hosted hundreds, if not thousands of hours of broadcasts just like this. So please ask any question that comes to mind. I'd rather you ask it than try to remember it and then wait for the right time to ask it. Just dump it into the question section. I'll see it. If I don't answer it immediately, I promise by the end of it, I will. I guarantee that. All right, perfect. So it looks like we're good to go on the sound check. Looks like everything is up and running as possible. Now, I'm going to be showing a lot of charts, indicator setups, and scanners. Okay, so screeners. If you want to take a picture of it, you can do it. Okay, so right here on the screen, you'll see an arrow, yellow arrow, right? That's pointing to another feature built into GoToWebinar, where you as the attendee can actually take screenshots of whatever I'm showing. You don't have a snippet tool or anything like that. Inside of GoToWebinar, you should see a camera button just like that I have displayed with the yellow arrow. You click that, it'll save a picture of whatever I'm showing onto your desktop. Okay, so that way you can go back and reference it. So you don't have to try to draw out a chart or take copious notes. You can simply just take screenshots if you'd like. Okay, so I just want to make sure you know that's available so you can, nothing I'm sharing with you today is proprietary, meaning it's not someone's private IP. This is all open to the world, and I'm just putting it together for you in a simple to follow process that you can take advantage of. Okay, that's my goal, is I want you to walk away empowered. All right, so I just want to let you know that feature's there. Now, what we're talking about is a specific process to identify and find stocks that are poised to break out. We're then going to drop down into the option chain selection process, meaning once we find a stock, we've got to then decide what option to trade with that stock. If you want to trade the option, you don't have to trade the option, but if you do, then we're going to take it to the bottom half of that checklist. Okay. Now, you may be asking, what is he going to teach me, right? And how does he make income? Well, I'm going to give you the strategy today. The same strategy I teach twice a week, every single week live, over and over and over again for all of my traders. The program that we're displaying is an actual strategy that you can walk away with and use without making a purchase. If you want us to do it for you, then we've got an amazing trading signal service called the Options Profit Generator, where my team finds the trade, delivers them to you via text message and email every single night. Okay, so that's only if you want that extra level of service. All right, but that's there in the background because at the end of the day, we want to provide to you a service. Number one service is I'm going to teach you this strategy tonight. Okay, so you don't have to worry about spending time with me and then going and wondering, well, I can only buy something to use what I learned. That's not the case. This is a totally different type of presentation than what many of you have probably seen. Now, if you haven't heard me speak before, I've been in this industry for over 13 years. I've worked with thousands and thousands of traders in my career, okay? But what I follow is a momentum trend trading philosophy. Momentum is defined as finding where the money is. Where's this surge of trading volume on a particular stock? I want to find that. I want to know what that is. And then I'm going to deploy a catch strategy, meaning catch the breakout strategy. Okay, so momentum is how we find it. You're going to see a very simple strategy. Now, if it's the first time seeing this, it may look a little intimidating. That's why I have a checklist so you can reference, you have a reference point to follow along with us. Ultimately, I'm a master chartist. I was paid for over a decade. In my role as an executive, I was a chief revenue officer for, at the time, one of the largest financial education and trading technology companies. So part of my responsibility was to oversee the product development portion of the company. How can you develop product and oversee it if you don't know how the markets work, if you don't know how to read charts? Okay, so I had a unique opportunity where I was paid to learn how to trade versus most of you have to pay to learn how to trade at a master level. Okay, so that's where my experience level comes into play. So what we're going to be focusing on is a simple and repeatable process. To give you an idea, people like to know, well, how well does this type of process perform, right? How well does this system or strategy perform in the markets? Well, to give you an idea, the program, the Options Profit Generator, has captured over 2,900% since August and continuously counting. Okay, so this is not an untested, unused, or brand new strategy. This strategy has been used well beyond this program. Okay, but you're going to see today. What's awesome about this program is that it's able to be traded across any financial market. So what we're going to do is we're going to jump over and start walking through this process. The process is going to be diving into how to evaluate the market. And so what we're going to do is we're going to jump over into the charts. Okay, so we're going to be going over, and I'm going to be giving you exact parameters and settings of well-known and easily found indicators. Now, I use TradingView, tradingview.com. You can have a paid access, paid membership, or you can have a free membership. I have a free membership. I don't pay for this technology. In fact, I'm not even an affiliate of TradingView. I've just used them for a very long time. If you're not familiar with TradingView, or if you use Thinkorswim maybe, you can find and use this strategy. You don't have to have a special paid access to any technology, okay? These are readily found, easily used indicators. I'm showing you with the checklist how to stack them up together. 4D trading means we're looking at 4 dimensions on a chart, okay? So I'm gonna walk us through that. But before that, let's go over into some of the more well-known stocks to walk through this process. So we're gonna start, and we're gonna pull up, I'll pull up Apple, okay? So we're just gonna go to Apple. Everybody obviously has heard of what Apple is, okay? Just like the old iPhone, your old Apple. And we're gonna start walking through and breaking down the key steps to this process tonight, okay? Like I said, this is an open forum. I appreciate any and every question, okay? So feel free, there's nothing, don't wait for the right time, just ask your question. So the overall theme here to find the breakout is by following this process, okay? We're going to be looking and searching through the market to find the next big breakout. And how we find it is going to be leveraging 4 simple concepts. I want you to take a screenshot of what I'm about to share with you. So get your little mouse on that camera button that I showed you earlier, okay? The breakout formula is as follows. What we want to do is we want to find the volume surge. This is defined when we see more trading activity than normal for a particular stock. That's what a surge is. So if a stock averages 1 million shares, okay, 1 million shares a day, let's say that's the normal day. But we find a day where there's 2 million shares traded, double. What do you think is going to happen to that price? You think that price is going to move fast, or is it going to move slow? It's going to move fast, because that's how the markets work, right? That's how price action works. It's based upon transactions. So there's more buyers of Apple, right? If more people, maybe they're looking forward to the new iPhone at the end of the year. That happens every year, right? Whatever the concept is, whenever that theory is, when you start to see Apple stock price go up, what does that mean? That means there's more people buying Apple stock than selling Apple stock, right? That's how the price goes up. When it comes time to take profit and people start selling Apple at a high degree, what happens to that price? It goes down. What we're going to leverage is we're going to leverage the surge. When you see massive price movement driven by price action, which is a derivative or an effect of volume, okay? So we're going to go over, and I'm going to go give you another free site just to teach the concept of volume. Holy cow. So Yahoo Finance. You don't have to follow the strategy if you don't want to, okay? But what I'm going to share with you is should really open up your eyes to how markets operate. So I'm just on Yahoo Finance, okay? This is a free site. And specifically, I'm on the top gainer site, okay? So you can see here, this is the top gainers. You see this day gainer. So that's talking about today. This is a list of stocks in order by the largest percentage gain of the day in the form of a percentage, okay? You've got symbol, you've got the name of the stock, you've got the price, the last price traded, and then in the middle, you've got how much that price jumped up. Now, you're going to see this is some big old moves today. This is the biggest I've seen in a while. Look at 3,000%. Okay, that doesn't happen a lot, right? But the concept is going to be the same, okay? So symbol, stock name, all right, company name, last price traded here, how much that stock went up in the form of dollars or cents. Then you have the percent change here, okay? So that's what this is based on, is the top gainers. Then you have 2 columns here that we're going to talk about. So remember, step 1 of the 4-step process of the breakout is volume surge, okay? So this is what happens when we find that volume surge, okay? We get bigger than normal, larger than normal price move in a day, okay? So we have to understand volume. That is the number of shares traded, right? So for example, the top stock of the day was this big blow up for FAR Limited, FAR Limited, okay? Today, there was 458,000 shares traded. I mean, this opened up at a 2-cent stock, okay? Now, 458,000 shares may sound like a lot. It may sound like a little. We have to have something to measure that against, okay? So if we saw today, well, how does that stack up against a typical day? Well, the next column to the right of it, where it says average volume, this is based on a 3-month, okay? I don't use a 3-month time, but the essence of what I'm teaching is the same concept. So the average day for a FAR Limited is 23,000 shares. Well, today there's 458,000, okay? So that's almost 20 times the normal activity level. Stock price jumped 3,900%. Okay, now that's an anomaly. That doesn't happen that much. Many of you may think too, well, that's a penny stock. Well, let's go to the next one. Okay. Symbol CERE. Stock price jumped 136% today. You may think that's a penny stock. It's not. The last price traded today was $29.69. Okay, so almost $30. The stock price jumped $17 today. So what does that mean? That means it opened the day at $12.50. So it's $12.50 to start the day. Now it ended the day at 29. Look to the volume. That doesn't happen out of nowhere. 85 million shares today. The typical day is 300,000. I don't even know what the math is on that. So 10's 3 million. 10 times 300,000 is 3 million. 30 million is 100 times. So we're talking 250%, 250x more volume. Stock price jumped 130%. Okay, maybe you think that's because it's a $12 stock. Well, let's go to a $50 stock. Verve Therapeutics. Stock price jumped 20% today. Okay, 928,000 shares versus 1 million shares. Okay, what you're going to find about this market, you're thinking, well, that's not over. There's no 100% anything. It doesn't exist. But if you go up and down this list, you will see 90%, sometimes as low as 80% of the time. Let's say it's 80% of the time, there's a surge of that stock greater than the average. That stock price jumps larger than normal. Okay? Are those good odds? Do you want to know about that? Because there's no 100%, right? Go to the next one. 15% stock price jump, 4 times the normal average. Go to a $100 stock. The formula still applies. I don't care if you're 2 cents or $100. When there is a surge of volume, you will historically see a large percent of the time, talking about 80% plus, you will see a strong price surge follow the volume surge. So look at the $100 version. 1.6 million is a typical day. Well, today there's 7.4 million shares. Okay, so little over 5.5 times the normal activity. Stock price jumps 13% on a $100 stock. Go up and down the list here, and you will easily see that the large majority of the time here, you have a surge, and you've got a large price move. Surge, 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 surge. There's one anomaly here. Okay, so that's what we look for. Now, up and down the line here, there's all sorts of stock prices, $3, $100, $50, $70 stock prices. This is not about a stock price. I've seen, if you heard of CRM, the symbol CRM, which is Salesforce, they were on this board when they moved 40% in one day, and the stock price was over $200. And there was a massive surge of trading volume, and a 200 plus stock went up 40% in one day. So it's not a dollar equivalent or dollar based only strategy of volume. Okay, it's not. It's independent of it. So I encourage you, go to this at the end of every day and start to see how that volume impacts and makes those stocks fly up on the board in the top gainer philosophy. So that's why when we're looking for and following the checklist, right, we use certain indicators to identify and see these opportunities. And that's what we're going to go over, is what is that formula that you can deploy on your charts regardless of what chart you're using. I love that concept. You know, there's a concept here. Should you divide the volume by 2 because there are both buyers and sellers involved? We don't have to do that because we're combining several indicators to give us our assessment. Okay, so I get what you're saying. We first want to know the surge, because if we are bearish, we also can trade the bearish movement. Okay, so we can go both sides. We can go bullish break, we can go bearish break. Okay, so it's finding the volume. That's number one. Number two is we've got to have an ability to know, to go with your question, are we looking for an uptrend? Are we in a downtrend? Are we in a pre-breakout? Are we in an active breakout? Are we in a post-breakout, an end of the breakout? There's really 3 stages of a price move. We want to find trades in the pre-breakout stage. We don't want to chase something, we want to catch it. We don't want to chase our dinner down, right? That takes a lot of energy. It's very stressful, high anxiety when we're trying to chase our next meal. We don't want to do that. We want to catch it. Okay, we want to let it come to us. So that's the concept of how we combine volume surge and direction. So I'm going to stop here for a moment. These first 2 steps help us to isolate and drill down across thousands of stock symbols to find the ones that are poised to break out, that have the right formula to give us that next breakout. That's what these first 2 steps are. So if we can spend our time and energy isolating and filtering through all of the thousands of stocks to find the right ones, that's going to help set us up for the next 2 steps, which are the simplest steps. Once we know the volume surge and identify what direction, that's the what to trade. Then we've got to know when to trade it. Okay, that's the timing that we're going to give you. Okay, the timing rules to enter the trade. Then we've got to manage the trade, right? So we've got to know where we're going to get out, how we mitigate risk using stop losses. So we combine all 4 of those, we have an active strategy. And it's usable in stocks, futures, Forex, exchange traded funds, cryptocurrencies. This strategy that I teach is applicable and I use across all the markets. So the beauty of understanding this one strategy today, and you don't have to make a purchase, right? If you want us to hand deliver you trades, we'll do it. Okay, there's a service for that. But I'm here to teach, and if you want extra help, we'll give it to you. But I'm going to give you this formula today. Okay, that's what this whole objective is. So I want you to keep this on the forefront of your mind. Take a picture using the GoToWebinar camera, right? Save this. I'll reference this as we go. But what we're going to do now is break this down. Okay, so let's go to the charts. And I'm going to now break it down so you can see exactly how to start leveraging simple charts. Now, like I said, I'm using TradingView. You can use anything you want. Okay. The first thing we've got to do is find out how to enter and set up the surge. Okay, so what I'm going to be using here, and you come up to the top where it says indicators. So you click on indicators. Now this is if you're using TradingView. If you're using Thinkorswim, I mean, I have a TD Ameritrade account, use them for years, and I use the Thinkorswim platform. You can use any broker this works with, right? So Charles Schwab, Fidelity, Interactive Brokers. I mean, there's so many brokers, so it's not a broker only strategy. Okay, so I'm just using this because I've used it for a very long time. So what we're going to do is we're going to add our first indicator, which is volume. Okay, so you just come up to indicators. Like I said, this is all free. You don't have to pay for this. Pay for this software. In fact, you'll probably see some ad pop-ups. Okay, so I haven't paid for it. So you click on volume, and then what's going to happen is we're going to get our first indicator of the day. So this is the first of 4 indicators that we're going to use, that we use over and over and over again. So on the bottom half here, you're seeing these columns. Okay, so this is representing and giving us the number of shares traded in that given time frame. Now I'm using daily charts. At night, I only look at daily charts. Okay, so that's what's found up here. If you're unfamiliar with TradingView, this is where you see the time frame right here. Okay, so that's daily. So all of these bars, these candlesticks, are representing what happened in that day. Okay, so open, high, low, and close. I like to use Japanese candlesticks. Now below here, you see these columns, and they're reds and greens. Okay, green means the price went up that day. Reds mean price went down. That's irrelevant. That's not what we're looking for. So you can see today, June 29th, you can see this data box. So as I move my cursor, you see this volume box, see all the changes to the price? Well, that's the number of shares. That's not dollars. That's number of shares. So you can see today we had 64.499 million shares traded, right? But we have to compare that to something. It doesn't mean much by itself. We have to have something, a baseline to measure. Are we surging or is that below? Was that a surge of volume or is that low volume day? Okay, so how we do that is we simply click on the indicator and we make sure we've got our moving average length. So we're using simple moving averages, nothing exponential, nothing like that. Simple is repeatable, okay? So all I have to do is turn on volume, okay? So automatically defaulted, it's unchecked. So we just gotta check it. Now, if you're new to this, you don't want the right lesson, we've got tons of video, archived classes already around this, so you don't have to master this in this class, okay? Go back, just take copious notes. You can take a screenshot and make sure you set this up the way that we have it set up. Yeah, no worries. Yep, no worries. We'll see you in our next session. Yep. So once I turn that moving average on, you can see now I've got a trend line down here. Now I've got a 20 length. 20 length. So what this is giving us is the average rolling daily volume over a 20-day time frame. The column height is what we're interested in. So for today, for example, you see how the column is below the orange line? That's a low volume day. Even on Monday, the 28th, yesterday, it's a low volume day. See, we're below. We haven't been at volume since the 21st of June. So Monday last week was the last day Apple traded above their normal volume. But then we had Friday, the 18th, we had a surge. That's what a surge looks like. You see how high this column is? That's a high column above the average. All of these bars back here, when you see these columns above, those are above volume days. That historically is how we define and identify the surges, okay? Now, when you go back historically, and I just zoomed out, you will see, based upon this moving average, it's a rolling average, right? So it's constantly at the end of every day, it's giving us a new average, right? It's a 20-day rolling average. Look at these spikes of volume and look up to the bars. You're going to see historically higher highs versus higher lows. You're going to see price swings. So if you think of a price swing, it's from the high to the low in that day. So we go to some of these big column bars, you're going to see large plays in the market, large price moves, even on a $100 stock such as Apple, okay? That's what we look for. So even on these bars, come back here to January 25th. Look at the high. I'm just going to draw them here so you can see it. Here's a high, here's a low. So you're talking a 6% stock price move one day, okay? Surges is where you will historically find a greater daily average trading range than low volume days, historically, okay? That's why it's a key piece to this puzzle is identifying those breakouts. So they also help kickstart a trend. So irregardless of what symbol we look at. So I'm just going to go, this is the watch list that I keep adding to. And what I'm going to do just for a simple exercise is I'm going to go through, I'm going to flash through here. Remember, this is the most recent activity, which is today on the right. Okay. So as I run through this, I want you to see and answer the question. Was it a high volume, low volume day? I'm trying to train your eyes to see the market in 4D. Okay. We're only on one dimension. Okay. And how quick it is to be able to filter and find it. So GE, above volume day. Okay. Apple, low volume day. Sally Beauty, low volume day, half volume day, okay? Target, low volume day. See, I'm just looking right here up and down the line. I don't have to get complex. I'm just looking right here on the line, up and down vertically. MasterCard, volume day, right at it, right? You see where the bars are. Low volume day for Ford. Adobe, low volume day. You see those bars, those columns below the bar? I'm just looking vertically at the most recent bar, the right furthest most bar, okay? Under Armour, low volume day. You see how simple this is to quickly identify what's happening, okay? AT&T, low volume day, Occidental, low volume day. Right? We're able to sift through very quickly. When this becomes super relevant is, as you learn with me, we also use low volume and high volume. Okay, so there's different ways to leverage extremes: extreme high activity, extreme low activity set up for the next move. Okay, but I don't want to get too far ahead. But just look up and down vertically how fast it is to see what type of day we had. Saber, high volume day. Okay, we're able to just quickly run through charts and visually understand what's happening. So now the next step. Okay, let's put it all together. If I'm following the checklist, which we should, what we're looking for to set up for this option setup is volume above the 20 volume moving average. Okay, that's what we just set up. Now what we need to start doing is identifying the actual setup. Okay, so now we're getting into the actual trading portion. So this top portion, right, is the search criteria. We want to have volume above the 20 moving average. I like to trade stocks greater than $5. Really, $5 to $100 is my limit, but we're just going to say greater than 5. Then we're going to make sure that we've got liquidity. I'll show you how to do that in a moment. Okay, but now we're down here. Okay, now we're down to these 3 steps. Okay, this is where we start to really identify what the next trade is, right here on this portion. Okay, so what we've got to now add is another dimension to the charts, and that's understanding the direction. So there's 3 stages. There's the pre-breakout stage, which is where we want to be. Okay, there's the active breakout. I like to also reference it as the train has left the station. What does that mean? That means you show up to the train, show up to the station, and you look up and there's a train going. Right? You know, we've probably all been there. If you've ever traveled, right, more than a few times, there's been those times you're running through the terminal trying to catch the flight, right? And if you miss the flight in your life, you know, it's very frustrating, right? That means that the plane is left, it's taken off, this train is left, your Uber left you, whatever reference or analogy you want to use, maybe a cruise ship when you're at a local port. Okay, it's left. That's an active. And then you have the end. Okay, we don't want to be at the end of a breakout. We don't want to be in the active breakout. We want to be at the moment before it breaks out. Okay, so it's about getting set up in advance of that breakout. So we have to know the stages. So what we're going to do now is add 3 more indicators, the final 3. All right, so it's 4 dimensions. We've got 1 dimension. We're going to add the other 3 dimensions. Okay, nothing exponential. I got questions on exponential. There is volume exponentials, right? There are. Okay, but for me, most people don't quite understand the exponential side. So rather than try to fit a round peg in a square hole, I keep it as simple as possible. And if you understand exponentials, then sure, we talk about how to adapt them to get a little bit more precise. But overall, historically speaking, simple will outweigh anything complex. Okay. So, because if you think about it, right, this is a skill set. There's a lot of learning that takes place to get into the position. So what we're going to do is we're going to add 3 more dimensions to the charts. Okay, so we're going to use simple moving averages, but we have 3 of them. Okay, so now on the indicator list up here, we've got 3 moving averages, and they're nothing more than simple moving averages. So like I promise you, you don't need to be or need to have a master's degree in trading, in chartist, to run the strategy I'm going to share with you. So these are very simple, and we're using a 10 length moving average. We're using a 20 and a 40. Okay, 10, 20, 40 with our volume. So what we look for is we look at these averages as a trend line. So when I look up and down, and I zoom in here, this blue line is a 10 moving average. So what that's doing is it's calculating going back 10 bars and giving us an average price over the last 10 bars. That's what the 10 represents. The 20 is giving us an average over 20 bars. The 40 is a larger picture, okay? So 40 is 40 bars. And we're looking at them vertically, up and down the line. The most precise trend that you're able to glean from the market is manually drawing trend lines. I can get earlier into positions because I've been taught and I've been trained as a master chartist. I can chart with the best of them. But most people like yourselves didn't have the luxury of being paid to do this. In fact, the issue with learning to draw trend lines is how subjective they are. Subjectiveness is like art, right? So if we put a Picasso up, if I had a Picasso sitting here, I'm not a big fan of Picasso, but if I did, we would all have our own opinions about it, right? That's subjectiveness. It's art. And if I have a math equation, 2 + 2 = 4, there's nothing to really argue about that. There's no opinion if 2 and 2 is 4, is there? That's objective. That's where we want to be, as objective as possible. So if you are not comfortable or accurate, or heck, you just don't want to spend the time to learn how to be a chartist, that's fine too. These play a strong role in helping alleviate the effort of learning how to draw trend lines, okay? So we use these as a 3-step process to understand the direction. So Apple, for example, here is in an uptrend. Here's the close today, which is the most important price. Here's the close. Look how far above the blue line we are. So we are clearly trending above the 10 moving average. Well, then you can also see the yellow, which is the 20, also in an uptrend. Just look at the direction of those trend arrows, right? See the direction going up, okay? And the relation to that close, okay? So we're clearly above. So just look vertically, okay? We're above all 3. When we get into positions where we are inside of, so let's go back here for a second. I'm gonna go back in time. So if you pulled up Apple on the 10th of June, you see where the bars are. See, this is where the close is. You see how compressed those trends are? That's sideways, okay? So if we're above the trends, that's an uptrend. We're below the trends, that's a downtrend. When we're in between the trends, that's sideways. You don't have to be a master chartist. You just have to visually recognize where the price is in relation to those 3 trend lines. So it makes it easy to replicate it, because if you go back to the 10th of June, if you set up your charts like I have it set up right now with Apple, go back to the 10th of June right here, you're going to all see sideways. There's nothing, there's no opinions. We're between the averages, right? So if we're below the 40, above the 10 and 20, are we really breaking out? No, we're not breaking out. We're really in the middle, right? We're in the middle. So the concept is simple and repeatable. So now watch what happens. Okay, so let's go back. Let's get to the end of this trend. Here we are today. Uptrend. Now watch how fast we can flash through these charts. So Centennial, okay, it's an overall uptrend. Why? Because we're up above at least 2 of them, all right? GE, downtrend. Apple, uptrend. Sally, uptrend. Target, uptrend. MasterCard, sideways. Ford, sideways. Adobe, uptrend. Under Armour, sideways. NRZ, downtrend. You see how simple this is? Downtrend. Bridgetown Holdings, AT&T, downtrend. Oxy, uptrend. CNP, downtrend. Walgreens, downtrend. Exxon, up but a little sideways, okay? See, we're bouncing off the yellow, okay? Cat, downtrend. Caterpillar, Coty, sideways. See how fast we can fly through these? I don't have to draw anything. I can simply flash sideways, uptrends, downtrends, right? And the beauty of this is that we'll see the market in the same lens, okay? Many of you are thinking this is too simple. Well, that's the point, okay? That is the point. It's got to be simple, right? So the reason I'm going through this type of cadence where we're just visually recognizing what's happening is so that we can start to train our eyes to see trends. I'm not talking about scalping the market. I'm not talking about trying to capture 0.5%. When we're looking for options to trade, stocks to option, we want to have at least a 5% stock price move. We want to have at least 5% opportunity to get out if we're going to trade an option. So these are not trades we're trying to get in and out same day. In fact, I'm not even expecting to get out tomorrow, right? The next day. The average time in trade using the strategy of the options profit generator is about 17 days from entry to exit. So we don't have to be down to the tick, okay, on these breakouts. This is designed to allow us to sit above the noise of the day, to sit on the top of it, evaluate what happened, and get set up for tomorrow. Okay, so tonight I look for tomorrow. Tomorrow I'm looking for Thursday. Okay, Thursday I'm looking for Friday. With the holiday coming up, I'm looking at Sunday, or actually Monday, for Tuesday, because the market's closed on Monday. Okay, so everything is based upon what took place today to set us up for tomorrow. Now, in our classes, we'll teach you how to do intraday trading with this strategy, but I want to keep it simple. This is a beautiful place to be. You could trade at night, you could trade in the morning, before the market's even open, set up your trade and be done. Okay, that's what the overall goal is. Got some great questions coming in. So all three together. So the questions coming in is your 10 moving average, your trend direction. It's one of the three contingencies, okay? The break we're looking for is a trend break. The final trend break is going to happen on the 40, the red one. Okay, so I have mine set color code. You can customize your colors, but if you want to follow exactly like I do, I've got the blue as my 10, the yellow as my 20. And now you may be thinking, why 10, why 20, why 40? Well, 20 is half of 40. 20 is half of 40, 10 is half of 20, excuse me, right? 10 is 4 halves of 40, okay? So there's a math sequence to this, okay? It's all about the halves, the 50%, okay? So that's why I have it set this way. And in our classes, we get really advanced about all different entries and all that fun stuff, okay? But there's a method and a reason behind the 10, 20, 40. You'll see stuff like 50, 100, 200. I use those too, but that's for investing. That's for longer term positions, 4, 5, 6 month type of trades, which are great, but that's not what this is. We're talking about how do we set up for swing trades and how do we get into position for the next couple weeks. Okay, that's what this level of moving averages are used for. Okay, so great questions. I've got questions coming in here. Do you take account of earnings reports and dividends? Personally, I do not. So when I personally trade, I don't. When I'm running the options profit generator, sending out trades, I don't send out trades within a few days of earnings. Not because I don't believe them, but for me, most people just get a little uneasy. There's like a 50-50, belief in like counter trend earnings reports and whatnot. For me personally, when I'm personally trading my funds, I don't really look at earnings. But from a signal send out to my subscribers, then yeah, I'll avoid those just to keep people less anxious, I guess. But personally, it doesn't bother me. All right, so watch what happens now. Now we're going to stack. Okay, we're going to stack these on top of each other. So 4 dimensions. I wish I could just cut out the previous moves, all right? Which I can, but it's hard to flash through it. So when we're lining up the 4 dimensions, this is what we look for. I'm going to give you a sneak peek. So I already went through and started to pull up some trades that already fit. This is what a trend break looks like. So you can see I'm paying attention to the wicks, the opens, the close prices here. Okay, so look at this bar. This symbol's ARRY. I already did some legwork earlier, so I start to build a little list here so I can visually show you what a pre-breakout, what it looks like. Okay, so you could see how we penetrated and went above this red 40 moving average. And we had a volume day. Okay, so this is all today. So the average day, so right here in this volume box, you see where my cursor is. On May 26th, this is the date I have my cursor on. In green is the number of shares traded on that day. So 3.5 million shares. To the right in that red color, that fuchsia color, is the average at that point. So on that day, the average was, remember, it's a rolling 20-day average, right? So at that point, you take the 20 days prior, the average was 6.5 million. That's a low volume day, right? So when I come to today, you see how the volume on the day was 5.1 million. The average is 4.2. So we're 900,000 more shares than normal. And we had a break of the trend. See the break, right? See how the bar, it doesn't matter open, close, right? Just look at the bar and look at the high. See how we penetrated above this red trend line, okay? That is a pre-breakout pattern. Let me show you another one. This is Mattel, right? So this one hit right at it, okay? So this is 2056 was the moving average. We closed just underneath it, okay? So that one's right at it. That's a borderline, but you could see what it looks like. See how we penetrate, and we had volume. There's a big volume day, 4.4 million shares. Average is 2.2. Okay, what direction was the buying action? Was this a bullish or buying volume, or is it more selling volume? What did price do? Price went up. So it's a simple way to understand whether more people buying or selling. Well, if the price went up with a surge, that means there's more buyers than sellers, correct? So that's why we had a question early on tonight about, do you split it in half to take buying and selling? No, we're able to see based on price action what side of the trade was it on. Okay, does that make sense? So that's how we combine all of this together. Let's go to the next one. I just want to show you visually what we look for. Here's another one. So see how we broke above and closed above, broke this trend line, and we had a volume day. This is Avaya Holdings, right? So you can see here, 2.3. See, look vertically. We broke above the trend with volume. Okay, that's a pending breakout. Let's go to the next one. Avaya. See how we broke above? Volume day. Okay, that's what a pending breakout looks like. Bark, same thing. We're looking at this red. Okay, so Bark, the original Bark company, 5 million shares typical day, or 2.7 typical day. Today 5 million. See the price break above the red. Where's that at? Well, that's in the checklist, right? So we have the checklist clearly defined what the rules are, right? So we're down here. Candles close above the moving average 40. Bar volume column above the volume 20. Okay, so I just went, there's more, but I just pulled 6 of these just so I can visually help you see what a pre-breakout looks like. Let's go to SID. Same thing with SID. Okay, so let's go through and I'm going to show you active moves, and we're going to go back and I'm going to show you what happens when we stack these up together. So let's go to Target. I'm going to go to well-known, well-traded symbols. So when we go to Target right now, this is an active breakout. We want to be at the point of initial breakout. So where do we find that? Well, we go to the first cross of the price above the 40 MA, which is way back here. So this is the pattern that we look for. So you see this break? Let me go back and I'm going to erase the future and just go back to this bar. Okay. So if you pull this up, now these runs can last weeks and weeks and weeks and weeks. This is what we look for. This is the checklist. Okay, this is Target. It's a $187 stock price here. So you see how we broke above the 4 trends, right? So we had the 4 Ds, right? We closed above the red 40, and we had a volume day, right? So we had 7.7 million shares on March 19th. The average day was 5 million. Okay, so about 150% was the trading volume percentage. This is what we look for. And what happened after that? That's the breakout we look for, right? Now this lasted, this was the initial break. That's where we want to be. So what you'll find is that as you understand and learn this process, you're going to find yourself in positions trading stocks that you've never traded before. Most people tend to trade just a handful of stocks in their career. Now, to me, that's relying upon a lack of ability to find other stocks to trade at the right time. Okay, so if you trade just a handful of stocks or symbols, you become an all or nothing trader. If those 5 or 6 stocks aren't in a breakout, because not every stock always moves. You go through breakouts, you go through consolidation, which is sideways, then you reverse, then you go sideways, then you reverse again and go the opposite way, right? There's constant waves that are occurring across stocks. And if you only trade a handful of them, you're missing out on other potential breakouts, and you're stuck just waiting for those handfuls to move when they should move. Okay, so this will open up your peripheral, open up your bucket of opportunity to expand, right? And that's what's important. Yeah, so there's multiple dimensions, right? So once we understand this process, so the question is, does it have to close above, below? Once we understand this basic concept that I'm teaching you today, there are multiple different strategies that you can take and evolve with what I'm teaching you tonight, okay? When we see runs like this, for example, with Target, okay, this run started on the 22nd. So we're talking over, you got March, you got April, May, now June. That's 3 months. This breakout has been going for 3 months now. We're going to teach you other ways to re-enter if you missed it. And you can see simply how, right? Watch how these trend lines react. Look at this bounce. What happened? So we had an extension, retracement, extension, retracement, deep retracement down to the 40. The 40 became a level of support, and then we saw the bounce. Then a retrace, support came in. Bears lost control, bulls took back control. Boom. Then we had the most recent slingshot. Then look, even the yellow, the 20, also acts as a level of support, right? You see it here, support, 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 support. The blue line also acts as a level of support, right? You can see all these little bounces up and down the line. This is the trend line, okay? So we'll teach you different ways to leverage those different bounces. But from a simplistic standpoint, if we have an ability to find these breakouts, this point right here that I'm pointing at, that's where we want to be. Got questions back here, even on the bearish move. So same thing. So inversely, not only do we catch bullish breakouts, we can also catch bearish breakouts. So instead of buying long calls, we can buy long puts. Okay, so it becomes multidimensional. I can also use the same strategy to trade Forex. So, oh, there's a nice break on the Euro CAD daily. Okay, I can also trade Forex with the same process: volume, moving averages, trend breaks, reversals, catch. Same process. Doesn't matter what instrument. In fact, I also use this in trading cryptos. I can show you the same breakouts, same patterns. There's Dash going bearish. Okay, there's Dash going bullish. You see the clean break? Let's go to Bitcoin. Look at Bitcoin. Look how the markets trend, bounce, break, test, bounce, support. So now we go to Bitcoin and say, oh, look at like Bitcoin is getting close to a potential breakout. Right? So it's all about money flow, market flow, price action, volume. I don't care what financial instrument you're looking at. You can go to indexes like the SPY, the NASDAQ, the Russell 2K. Where's the Qs? Strong uptrend. What about the SPY? Strong uptrend. What about the Russell? Uptrend, but it's testing and retracing. Okay, you can see the bounce. That's a retracement. The diamond, also an ETF, sideways, right? You may not know it yet. You keep at this, save these indicators, it'll start to pop at you. Start to pop. That's what we want to do, is make this simple. Okay, that's the process. Let's go back to where we're at, Target. So we got a question on February. So here's February's break, right? Well, there's no real break. So February, bearish move, right? Is that what you're referring to? So here's February. We had a trend break, right? See, we closed it below. Underneath volume though, okay? The volume play was on the next bar, okay? So uptrends, downtrends, same vertical look up and down the line is what we're looking for, all right? So the magic question should be, how do we find these? Now I could flash through, and we've already done it a couple times, right? So this is a list of, I don't know, how many people are in here? There's 36 stock symbols, 36 stocks here. And you can see when we're looking for new trades, right? There's really two hats. There's the hat we wear that's, okay, let's analyze the market. Then you flip the hat around, it's like, well, let's trade the market. Let's find an active trade. Let's find a new trade. In fact, let's find a trade that may break out tomorrow. Okay, let's go through an active implementation of the strategy tonight. Okay, that's what we're going to roll with. So when we flash, we've got to get a head start. Okay, so you can see what we're going to do. We're going to flash through these, but we got to get a head start because there are thousands of stocks in the market. So you can do this. There's so many ways to do this for free. Yeah, there's a scanner in Thinkorswim. I like your style. Yeah, so there's a scanner here. I don't use it, but there is. So you can come to scan, stock hacker. I trade here, but I just place trades. I don't use all these different tools. What I use, I just use the TradingView one. The reason why, because for me, it's easier to get to the chart. Okay, so I'll show you. You may want to take a screenshot of this. I don't want that. So I'm going to come down here and let's open up this stock screener section. Now I'm going to clear out these filters that I already have set here. There's 11,470 stock symbols. How on earth are we going to go through and find the 1 to 2 trades for tomorrow? How are we going to find it? We've got to sift through this. So I'm going to give you the sift. Give you the sift. I'm going to give you the settings to set this all up so we can isolate our focus in the right area. Okay, because like I already shared with you, there's active breakouts, pre-breakouts, post-breakouts. We want to be in the pre-breakout stage. So I'm going to give you some parameters to use. Now you can use this as Sean said, but you can use this as our Thinkorswim. There's Bar Chart has something like that. Yahoo Finance has a screener like that. I mean, there's so many different free scanners out there. I just like this because it's all integrated into the charting software that I use, so it makes it easy. And like I said, this is all free. I don't have a paid access. Let's see here. Does it show it? Yeah, see, explore our plans. It says upgrade. Yeah, so I don't even have see, I've got the basic. I don't even have a paid account. I love this. You know, I got to pay for technology. You can get it free, right? So I'm on the basic package. All right, so just because it's free does not mean it does not work, okay? There's lots of services out there that you can pay for and get the same information. All right, so we're going to break this down. I'm going to get that 11,000 number down, and we're going to cut it down, okay? So how we do that is we're going to apply some very simple filters to the mix, okay? So let's start where we're starting from. So we've got 11,000 stocks. We're going to chip it away. And then we're going to use that technique of just flashing through. We're going to look for that break with volume visually. And then I'm going to show you how to set up entries. And then based on that, we're going to drill into an option and hopefully find a good option trade. Now I say hopefully because what you're going to find is that there are times where you should not trade the option. Just because we can doesn't mean we always should. So when you go to the checklist, that's why there's 4 steps. So to find the stock trade, there's really only 2 criteria. Candles above, right? I mean, really technically 5 criteria to find the stock. 5. We trade the option, we layer on another 4. So truly, we're looking at 9 confirmations that have to be qualified, that have to be there for us to trade the option. So we're not talking about just blindly taking anything. We're talking about literally 9 criteria that must be met to trade the option. Okay, so if you think that chart work is simple, it's supposed to be. But when we're talking about trading options, we have another layer to take into consideration. Okay, I just want to highlight that. So we're going to give you all the rules. So we're going to walk through. We've got to find it first. Okay, so we got to find the right stock to then go look at the option chain. All right. So sometimes it happens right away. Sometimes it may take us a few minutes. Okay, so but this is through habit. We're able to find this fairly quickly. Once you get through the process and you come into a couple of my classes, you'll be able to really pick this up and really go a lot faster. Okay, but let me just go through this. So 11,000, we're going to cut that down. So what I've done is I've created and I've saved. Like I said, this is not a paid account. It's free. Okay, so everybody can do this. Sign up with the basic package and you can set up these save screens exactly how I have them. So I really break the market into 3 price levels. I've got a $5 to $15 stock price. You can see it right here where my cursor is. Then I've got a $16 to $40 mix. And then I've got a $41 to $100. I don't really trade options over $100 stocks. That's just my personal preference. I'll explain why in a moment. But I don't really go above $100 on the option. So the reason I say that is because this helps us to isolate a list We can run through the charts very quickly and we can look for opportunities. Okay, so it really just helps to isolate the market for us. I'm going to start here. So I'm going to click on this, and then we're going to get now an updated list. So you see how we had 11,000? Now I've got 51. So in just a flash, I went from 11,000 stocks down to 51. Now, what's the criteria? It's very simple. A tick is a penny. Okay, so you have points are dollars. So if a stock price is $100, that's 100 points. If there's 25 cents on the end of it, it's $100 and 25 ticks. So ticks are pennies, points are dollars. That's what ticks are. So when we're here, this is the setup. These filters are active. I'm looking at common stocks. Okay, these are not anything other than commonly traded stock symbols. I'm in the New York Stock Exchange and the NASDAQ. That's where we're pulling from. That's what the exchange means. These are automatically here. Okay, there's a default. This is where the real search criteria is. Okay, so volume, change percent. You may not be able to see it, but these are blue. They're like a tint of blue. That means they're active filters. There's a whole bunch of filters, okay, but these are the active ones. There's only really 4 filters here. So volume, remember, is today. Okay, the most recent volume is represented in that volume. And you can see here, I've got 1 million as a minimum. 1 million. It's not 500,000. It's not one share. 1 million will typically mean that we're talking about liquid stocks. If a stock trades at 1 million shares, it's a liquid stock. That means it's commonly traded, well known, and we don't have to worry about crazy spreads typically or anything like that. All right, so it's a strong number to filter down for all the small stuff. Okay, some stocks average 1,000 shares a day. I'm not trading that. I want to trade 1 million or more. Now, remember the average volume column, right? So then what I want to do is I want to have stocks that average 1 million. So these are 2 different filters. One volume on the left is about the recent volume, what happened in that recent time period. Okay, 1 million or more. The one to the right that says average volume is the one that sets the average pace. So I also have the average volume set at 1 million. So take a screenshot of these settings. The bottom one here is I want to see a bullish move today. Okay, so I want to try to catch a breakout going up. So the change percent is above 0, meaning they're positive gainers on the day. And then over here, this is, I'm going to make this an asterisk. You can do anything you want here. I just like to break the market down into chunks based on stock price. And here's the reason why. I always trade the option if the option's there. When you find optionable stocks priced of the stock itself, priced between $5 to $15, the underlying stock, you'll see an average share price of less than $1.70. Okay, so for those starting off in the options market, and you don't have a lot of capital, it's a great area to be so you can get affordable options based on your account size. So if you have a smaller account size, these are phenomenal little groups to trade. If you have a larger account, instead of trading 1 contract, 2 contracts, you can trade 10, 20, 30, 40, 50 contracts, contract multipliers, okay? You will also, historically, statistically speaking, see larger average price ranges in a $5 to $15 stock, greater moves on average than you will a $100 plus stock. So that's another tip and technique. Okay, so phenomenal little setup. Majority of my trades really come into the $5 to $40 range. It's typically the stock price that I then option, for the simple fact that you get a lot more volatility per day just based on that price value. So if you think about a 10% move is more likely to occur at smaller price stocks than it does on the larger price stocks. Okay, so that's what I want to leverage, okay, to get those quick breakouts, high volume breakouts. But if I did this and say, let's say it's $100, okay, this is a flexible number here. You can do whatever you like. This is just what I like to do. So if I do 100, 5 to 100, instead of 51, there's 244. It's not really that much. Compared to no ads. I got to upgrade. It's free. So there's 244 matches. Now we can go through those very quickly. Bang, bang, bang. Okay. But I'm going to break this up into pieces. Okay. So that's why I have it set in this manner. But what we use this for is an advanced filter to help us get in front of the positions very quickly. So watch how this works. So I'm going to go to the top of this list, which is ZH. Now, if you have your setup just like I did it, you can go with me step by step here. We're going to see the same things. And what do you think we're looking for? So I'm going to scroll down a little bit. And what are we looking for, right? We're looking for the break. We're not looking for, that's an active break. And all we do is we just hit I'm just hitting the down arrow key. I'm just hitting the arrow key. That's a downtrend. Downtrend. Watch out, we're going to be able to go through it. Uptrend. Uptrend, V-ray. Little sideways retracement. Sideways, UMC. You can see it. And all we're doing is we're going through, we're scanning, we're just looking vertically up and down the line on the right-hand side of the chart. And we're looking for the break above the 40, the close above the 40, and a column above the 20 moving average on the bottom. That's all we're looking for. Now, sometimes this happens fast. Sometimes we have to go deeper into the list. But you can see I'm just hitting the keyboard, and this is one. So we're going to go through 50 stocks in 60 seconds. There's a lot of power to this process. Now, the beauty of it, we just missed this. Okay, this is IS. This is the initial break. This is what we're looking for. See that big move today? That's what we're looking for. Okay, that is what we're looking for. We want to see that moment of the trend break. We don't want to catch. We don't want to chase. There's one. What's this one? This is an acquisition holdings company. But this is what. Let's zoom in. Yeah. See, this is the break. Is that a close? Yes or no? Type it in. Is that following this checklist? Do we have candles above? Close. Yep. Candles closed. There's the candle close. Do we have the bar volume column above? Yeah, we do, don't we? I don't typically trade acquisition holdings companies on the option, especially the option. Okay. From a stock perspective, that's what we look for. Okay. So we're going to keep moving. But you see, that's what we're looking for. So it only took us, 30 seconds, 45 seconds to find. Let's go to GE. Okay. So we're going to keep flashing. I'm going to go to full screen. Okay. I'm just hitting the keyboard up and down the line, looking for the break. That's all we're looking for. That's already breaking up. We want to see, there's the moment a few days ago. Now this list is evolving. Okay, so every day this list can change. Yesterday there was, I think last night there was 120, 125 stocks in this category. Today there's 51. So what does that tell us? That means there was a lower volume on average in the market, lower average days. So I'm just flashing. Also, it doesn't matter. I'm not really concerned about the stock. These are all because we have 1 million shares or more. Oh. That one closed above it, man. So we can also trade bearish, but that one's not quite there. These are all actively below. Okay, so we're just flashing through these 51. That's a big old break. That's a big old break. There's bar closed right above. Let's see, is it above it or is it at it? Just underneath it. Oh, actually, just above it. So Bark, what is Bark? Newer company. CBOE. Okay, so take a look here. So the close is 1063. You can see it in the data box up top of the price next to the stock name. 1063 is the close. What's the moving average? 1058. It's like right above it. It's almost double the moving average, right? So 2.7, it's at 5 million. Nice, I love it. So I got a comment. Thank you for the Sally Beauty Holdings you showed 2 weeks ago. You got 20% profit. Awesome. Yeah. Yeah, above average, that was the volume scan right here. So above average volume was right here. So there it is. Yeah, the question was, so the 100%, the calculation, I can do that in bar charts. I just don't want to jump to two different platforms tonight. But here, I'm just visually flying through here and seeing them. So 51 didn't take long. But there's Bark. Now I'm just going to take a quick peek. I never traded Bark. I just want to see if there's liquidity on the option. Yeah. Yeah. The reason I looked at it because it's such a, see, this is the latest stock data right here, 18th of December. So it's a newer stock. There's not a lot of history, which is fine from a stock side, but I'm trying to trade options. Okay. So I want to have something established. It's not like a complex thing. If there's no data on this, it's a new stock. Okay. So we're going to go to some, traditional setups. We're not going to be aggressive. RO, that's already passed, already left the station. AUUD left the station. That's a left the station. Look at that, right? Already gone. Alto's gone already. AGEN, look at that trend. You see how visually you start to see how long these trends can go? But we can find those. I mean, it's just like we had somebody that 2 weeks ago made 20% just in the class, okay? So we just flash through. If we get through these and nothing pops, that happens, okay? We don't have to trade just because we can trade. To be objective, we've got to check 9 boxes to trade the option. So, we're just not jumping in. We're following a process, and it's objective. You can all see. You have the rules. So Sid had the break. You see this break? But we didn't have volume. Okay, so that's not a decisive trend break. We want a decisive break of the trend. That's why we use volume paired with the trend. 4 steps. Okay, they got to check the boxes on the 3 dimensions of the trend, and we got to have the volume. So it's just going to be discipline. I mean, if it's there, it's there. If it's not, it's not. We could take the night off. We're almost done with this list. So nothing checked the box. I mean, even bears would show up. Let's see, nothing yet here in this group. See, this is a breakout. That's IS. We already saw it. Okay, so now what do we do? Well, how long did that take us? 2 minutes, 3 minutes? Let's go to the next one. So now I'm in the next category, $16 to $40. Okay, so once again, I just broke this up into pieces, into chunks. Now that's a breakout. This is a big old breakout. That checks the boxes, but that's such a massive jump. We're not going to play with that. Not that it's a bad thing. It's just, it's got to move a lot tomorrow to keep the breakout going. All right, I also want to get us in a position where we can actually catch the entry. Jeffrey Financials, anything with a gap like that, I'll teach you in class. It's better to wait for the retracement, which is bound to come in a gap like this. We might as well wait for the retracement. There's no reason to jump into that gap. Counter trend the gap, that's a whole nother story we'll teach, but simple, we're not going to trade those gaps. VIPS, and now we're just in the next category. Okay, now we're in the next category. And we're scanning. This is what scanning is. Alcoa. Let's see what this one is. I like Alcoa because it's a big company. It's almost a conglomerate. I mean, it's a big old boy. All right, so we closed. So this is 37.53 is the close. The moving average price is 37.67. I mean, we're within a fraction of a percent from being right on it. So Alcoa is, we're going to put this red. Okay, so I'm going to add Alcoa to this list. Okay, then we're going to go through and break it down. So that's right at it. I mean, when you're within a fraction of a percent at the close, you're pretty much there. All right. Like I said, there's no 100% anything, but that's right at that price. Okay. So I'm going to add that here. This is the watch list we're building, and then we're going to go in and we're going to find the option. Okay. So we have 1, 2, 3, 4, 5, 6, 7 actual stocks that are at the right point. Okay. So that's what we're looking for, is what are we going to look to trade? That's the stage we're in now. That's the stage of that's a nice bounce. But we don't have the volume. Okay, so we have 1.1 million, average is 1.8. You see the column, it's below the line off the board. Array is already on our watch list, but that's what we're looking for. Mattel just right underneath it. Okay. Next one, that one's right at it. So that one's already on the watch list. Bark's on the watch list. Sid was under volume for the day, so it's not on the watch list. You see how it's under the volume column? Alcoa, we already talked about. Let's go to Grub. There's a break, but we didn't have the volume. Just underneath the volume, you see this? And that's also a gapper. So gappers tend to retrace the next day. So we're not going to set that trade up on a gap. WW, that's a break to the south. Mox. Let's go through a couple more. See if any jump out at us. And we're just looking visually at what's happening. That one's closed. Let's see, clean spark. Just shy of the volume for the day we needed. Nordstrom. Huh. Nordstrom has a lot of options volume, so it may be fun. All right, so let's look at the close. So 36, we're just underneath the volume of the day. Nordstrom was just underneath the volume we needed. Can't see with the cursor. There we go. Let's go through a couple more, see if we get anything else that jumps out at us. FCX, Workhorse, sideways, Newell Brands, sideways. Rollins, maybe tomorrow. Rollins may show up on the board tomorrow at the break. We'll see that. Lithium, Norton LifeLock, that's a meme stock. It's a Wall Street bet stock. Nothing wrong with them, but I'm not going to trade the option on them. The spreads are super wide on those. Yeah, Flex. So we have a close above but low volume, so we're not flexing on Flex. A couple more. See if anything else jump. Dun & Bradstreet. So close above. So we had a retracement below the red, then we bounced above the red today at volume. So we've had several volume days, you can see here. Interesting pattern. We'll add that to the list. We'll see what the Dun & Bradstreet. That's structurally there for us. Okay, so I think we've got enough to look at. Some of these days, I'll come in here and there could be 30, 40 trades. Some days there are no trades because we're being very precise. Okay, and that's what's repeatable. We're being precise. There's Dr. Pepper. I have a 6 and 7 year old or a 7 and 8 year old. They just had birthdays. And they had the Dr. Pepper for the first time. That was funny. 23 flavors. My kids don't drink a lot of soda. So I said, you got to try Dr. Pepper. And it was pretty funny to see their faces. All right. And I think that's enough. I mean, we've got plenty to choose from. Okay. So 1, 2, 3, 4, 5, 6, 7, 8. Some of these were close. I'm going to get rid of Mattel. I don't want to reach. There's no reason to reach. Sid was under volume. So we're taking that one off. Okay. So really we got 1, 2, 3, 4, 5, 6. Now, if you want to trade larger price stocks, go for it. I mean, you can do the same setting. You'll see what I see. You go to $41 to $100, or you take out the cap and just look at all of them. It's up to you. Yeah, I bet you can. Yeah, I think you can. Yeah, so the question is, can you also add one more filter to cross above the 40? I'm sure you can. Yeah, I'm sure that's possible. All right, so now what we need to do is set up and break. Even array, I'm going to get rid of that, because what's the rule? It's close. Okay, so I'm going to get rid of that. The close was down here, so we basically bounced off. So imagine we had a downtrend line. We came up and bounced off of it and closed below. Okay, so that's an advanced entry. I'm going to get rid of that. Let's just make it simple. Okay, I'm not going to deviate. This is a close. So RLGY, you see the close was at 1794. The 40 was at 1784. So 10 ticks or 10 pennies above, right? So that checks the box. So we're going to go through the simple entry. The entry is very important here. We've got 1, 2, 3, 4, 5 stocks we're going to look at, 2 option. But before we go to the option, let's set up the profit targets in the entry, profit levels, okay? The entry is important. The rule is to set 1 tick above the entry high, 1 tick, okay? So if I take the high of the day today, which is 816, our entry is going to be 817. Okay, it's nothing there's no rocket science behind it. 1817, 1 tick above. That's our entry in green. I'm going to make it blue. Let's make it blue. That's our pending entry. That's the key word here. We're not just going to buy Reology tomorrow. It's only considered a breakout if we have the price break out. Which way? Up. So by using the high, it allows us to get momentum and direction in our favor versus just buying it whenever tomorrow. So we're going to set up a pending entry 1 tick above the bar high. So that way, to break out, we're going to see the price go up. That's what we want. So we're going to be contingently setting up these trades. Now, on the profit targets, we're going to keep it simple, and we're going to leverage the past to help dictate the future. Previous highs. So we're going to set our profit targets at previous highs. So you can do 1 level, you can do 2 levels, depending upon how you're going to trade the option, trade the stock. If you're trading the stock, I like using 2 profit levels. If I'm trading the option, I'm just going to use 1. Okay. Now the caveat to this is that we want at least 5% in price move to the first target, to the first profit level. Okay. So in terms of profit levels, these are the 2 profit levels here that we're going to use as our exits to the profit, to the money side. Stop loss wise, we're going to go to the previous low, and that's going to be 1 tick below. Okay, so this is the most simple yet simple way and effective way to set up stop losses and profit targets. So I always have stop losses, protecting my trade, because if I'm wrong, there's no reason to lose the entire option. Let's just cut our losses. Okay, so we just use the previous price levels. Now, we get more advanced in that in classes as we progress, but just for this session, we're going to keep it simple. Now, the key is that we need to have enough price move, if we're going to option this, enough stock price movement to generate the profit on the option. Options are a derivative of the stock, right? So as the stock price goes up, you also get the leverage effect of the margin of the contract option price, right? The share price of the option. So you have 2 prices, but they're really tied together. The share price of the option is tied to the stock price, the movement, percentage move. So we really want to have a minimum of 5% to the first profit level. Now, we're not just going to arbitrarily pull a 5% out of our hat and trade it. Okay, that's not objective. That's just pulling a number out of our hat. So we're still going to leverage the structure of the pattern. And the first pattern here is only 3.5%. So then we're going to go to the second pattern. The second level is 7% away. You can see it here if I scroll down. See, this is 7%. That's the level just underneath 7%. That's the first profit level. So that way we know what the risk is of the option. So I'm going to show you how in one step using TD Ameritrade's Thinkorswim account, how we can set up an advanced order where we've got a pending entry of the option contingent on the stock price, and then predetermined profit targets, predetermined stop losses. So we set our trade up 1 time and we don't have to worry about it. It's all set up using an advanced order criteria. Now, the first couple times you may take time to understand how to implement it, but once you get the hang of it, I can rattle off trades in seconds. Okay, so I'll show you that. So we've got our target. So it's not going to be this one, it's too tight. Okay, so we've got to have the next target up, which is going to be the 1947. So we're going to buy Realogy only if tomorrow. Okay, so this is only good for tomorrow. We based the setup on today, based on the pattern breakout, but we've got to have the actual breakout. The final confirmation is the price must mark at 1817. It must mark at some point tomorrow greater than today. Okay, that's the whole point of this breakout. If it doesn't, if it goes down tomorrow and it doesn't hit 1817, that's fine. We don't want to be in it. Okay, so our trade will automatically cancel, and we're not in it. Okay, we only want to be in an active breakout, not a retracement. So by sitting above the noise, we're going to eliminate the whiplash. I mean, you can't get rid of all of it, but we can reduce the whiplash. Okay, and that's whiplash means we get in and it goes boom against us. It happens, but we want to alleviate it as much as possible. Okay. So now we've got the trade setup. Okay, so it's been long-winded on the setup, but I want to really walk you through it. After that, it becomes very fast and efficient. Okay, but remember, this is the setup. So we've got everything done up here. We've got all of these boxes checked, check, check. Candles above, volume bar above. Yeah, Mogo. Yeah, that happens. Yeah, it's still bullish though. I'll show you. That's why we're not scalping. Yeah, sometimes it happens. Then we've got our 2 profit targets set, and we have our stop losses. You know, the average trade in the options profit generator is 17 days. We love them to go straight up. They happen. All right, now what we got to do is we can be done. Okay, so we can just trade the stock and be done. Or if we want to trade the option, we've got to go another layer in. Okay, so think of your 7-layer dip. I love 7-layer Mexican dip, by the way. But if we want to trade options, we've got to now select the option. 4 criteria. We got delta rules, open interest rules, expiration rules, and a spread rule. 4. That's 9. Okay. So to get down to the option chain, we've got to focus here on checking these boxes. Okay. So like I said, I use Thinkorswim. So I use, what are we looking at? I already forgot the stock symbol. RLGY. I don't even know if it's option. Let's see. RLGY. All right, so we are on the call side. All right, so calls on the left, the way I have my platform set up, puts on the right. So follow the checklist. We need to have our expiration month, 45 days to 90 days out. We need to have our delta, 65 to 75. We need to have our open interest greater than 100. And then we need to have our spread less than 10% of the ask, okay? So July is too soon, right? It's June 29th. That's only 17, 18 days away to get to July expiration. So that's not 45 days. That's off the board. So that means we're left with August. And if we need to, we're in September. The way we look at option chains is we got delta column. Then we get a yellow color so it stands out a little bit. So we got yellow. So here's our delta column, open interest, and then we have our spreads between the bid and the ask. Okay, so this is how I vertically look at which option chain. So 65 to 75, there's not one in August. Okay, so there's 59 delta, there's 82 delta. If you're not familiar with what that even means, come to class and we'll teach all about deltas. All right, but for the sake of the presentation itself, we've got the checklist, you've got the range, that's what we look for. We're looking for 100 open interest, okay? If we don't have 100 open interest, that means there's not a large market for that option chain. Now, if I look up and down the board here, if I jump into September, you can see, well, we got 2,200 open interest for the $20 strike. Well, that's out of the money, okay? That's $20, the last price trade is $17.94, okay? That's not what we're looking for. We need to have the deltas up here in the money. So using a 65-75 delta, that puts us in the money. Okay, so I don't do out of the money options, anything like that. So conservatively, I like to be at that 65-75 level. So it lessens the volatility, it lowers the volatility when we're wrong. That's what it does. Okay, so we're trying to offset that volatility. So this one is not checking the box. Okay, we don't need to stretch the bounds. We don't got to push ourselves. It either does or doesn't. There's no open interest. Okay, so we're not interested. So Realogy is a great stock trade. So like I said, we don't have to go to the option. There's your stock trade. Doesn't check the box, don't trade the option. Okay, let's go to the next one. This one pretty much closed right at it. Okay, so let's go to Avaya Holdings. Same concept, you got the break. So I'm going to quickly go through this now so we can see it. Okay, just so we can set these up. We give you all this, so don't worry about it. 27.63 is our entry. Okay, previous profit targets back here. You have the checklist. I think it helps to visually see these. Now, if we don't have, say we're at previous highs, okay, which happens, we have another way to teach you how to forecast the future price. Okay, so it's not like you're left to only trade non-highs, non-recent highs. Okay, we'll show you how to do that. There's a 5% target. Okay, so our first target's there. Okay, stop loss is gonna be below here, one tick below. So we have that. Okay. Now we've got our setup 27.63, 26 quarter, 29.19 on the upside. Okay. Well, we've got to double check to make sure there's options, right? So what I typically do when I get a list is I'll start to go and just double check the option, right? So that way I don't have to sit there and try to set up every trade and then knowingly go in. Is that the symbol? AVYA. So it doesn't have it. So this is a faster way. Just check the option chain. We're talking about trading options, okay? So put in the symbol, and I'm looking at 100 or more. So we have it, okay? 1,000 open interest. Delta is too small, okay? We want to be in the 65 range. It's at 57, okay? We want to be at least a strike up, which is the 26. So you see the $26 trade. Look at these as individual trade. I mean, these are just, because it's the same underlying stock, these are individual trades or chains, and each chain has different interest. Okay, it has different levels of liquidity. All of these chains. So that we found the underlying stock, that we found an open interest, it's not at the delta. So we go to the delta, let's say 64. I mean, it's only 7. That's not a large interest for the option. So we got to skip it. Okay, so let's go to the next one. Bark. Let's check out Bark. What does Bark have? All right. Bark's got what we want. It's got bite. I'm just kidding. All right, that was not pre-planned. Yeah, so question coming in. What happens when we buy with zero volume? So RLGY was not a good option because of the open interest. The open interest was not at 100 or more. That's why RLG. This is what we're looking for. Take a look at Bark, okay? So here is the 64 delta. That's pretty much 65, okay? And I'll explain why that is in a second. Look at the open interest. So think of open interest as liquidity. Volume is the number of trades today. That's volume. Open interest is literally the number of contracts still open, meaning they haven't been exercised, they haven't been sold, they're still open. Okay, that's open interest. Okay, that is more indicative of the secondary market or liquidity of that option chain. Because in the volume column, the volume is the total number of options bought and sold for the day. Okay, so that volume is not necessarily indicative of buying activity or only selling activity. It is a total sum of both sides of the option. Open interest means that's how many is open. Okay, so that means that there's activity around it. There's an interest to keep it open, which ultimately on a call means that people are betting to the upside. Okay, so that's why we use that as a strong indicative data point of sentiment. Okay, so checking the box, 65 delta, that works for us. Greater than 100 open interest, that works perfectly for us. The next is expiration, so August, right at that 45-day window, right a little beyond it, so we're perfect beyond the 45-day window. Okay, now the next step is the spread. So the simple way to calculate spread, I use it against the ask. Some people do it against the bid. I just do it off the ask. Okay, so you go $1.60 to come in, that's the ask. The bid, the seller is $1.50. That spread is 10 cents. So you simply take the spread, which is 0.1, 10 cents, divide that into the ask, which is $1.60. Carry the decimal, or you can multiply it by 100. 6.25%. That's the spread. We want to be less than sub 10. I don't really do a flat 50 cents or 20 cents or 30 cents or $1, because if it's 50 cents on $1, that's a 50% spread. I'm not trading that. That means when I get into that trade, I'm down negative 50%. I don't want to give that to you. You would jump out the window and come run me down. in Florida, okay? We're not going to do that. So we're going to try to line up the trade. This is a setup. I never even heard of Bark, but that's what happens. The original Bark company. I don't even know what they do. Bark company. All right. So now we've gone through 9 steps, haven't we? 9 steps to get to Bark. So the call is Bark, $10 strike, August expiration. That's the trading signal. Okay. This process that I'm doing with you right now is the same process that we go through in the options profit generator. So this, in fact, is going to be tonight's trading signal. So bonus, you all just got a free trade for the night. All right, but that's going to be our signal for all of our subscribers. Right. In this process, we go through every single day. So this is us doing it for you, and it just went along with the lesson today. That's perfect. So how do we set this up? Well, this is how I like to set them up, as a contingent order. So I do them all at once. Now, we've got videos about this to walk you through how to do this. If you're in a different broker, hit or miss. Unfortunately, it's every broker is a little different. All right. That's why I love TD Ameritrade. I'm not an affiliate, so don't take it that way. I'm not an affiliate of TD Ameritrade. Do it, trade with where you like, but I love this setup, and I'm going to show you why. So I'm going to be able to set up everything on the option trade to trigger based off of the underlying stock. So Bark, here's our trade. So we got to come in and set up our entry. Entry order is going to be 1 tick above the bar high. Okay, so let's see. Bar high is 1090, so our entry is going to be 1091. 1091 is the entry coming in. 1 tick above today. Okay. There's our entry. That's going to be plenty. So we're going to go 1 tick in front of this previous high. So that is 1283. So that is our profit level to exit our trade. Is that greater than 5? Oh yeah, 17% mover. Now many of you may be thinking 17%, holy cow, how's that going to happen? Well, let's see, the last 17% move only took 10 days, 24%. 24% in 10 days. Previous up move to the high was 37% in 11 days. Okay, we've got 50 days. Okay, that's why I love these lower price stocks. All right, and then our stop loss is below this low, and we've never been below that low. So nice level of support on the bottom half. Okay, so we're going to be 1 tick below this low, which is 961. 961. There's our trade. Boom. So that is how we're going to drive the option trade. We're only going to buy the option at 1091 or more tomorrow. If it doesn't hit tomorrow, we're not in it. Nice. Dog products and services. There you go, Wayne. Wayne's the man. Always doing some extra legwork for us. I would figure with Bark. I would hope, unless it's like literally a tree company. Either tree company or pet supply company, right? So now we've got the trade setup. Okay, so what I do, and we got videos about this. I could spend 30, 45 minutes to talk about the essence of the setup, but I'm going to talk it out loud. But like I said, we got 6-minute video, and we'll walk you through the whole thing. Okay. But what I'm effectively doing is I did all this research to find the best stock to option. Why on earth am I not going to use the underlying stock to drive my option trade? This is what many people don't do. Many people just jump into the option, and you're hunting, mining through dozens of ways to trade thousands of optionable stocks. I mean, that's where your head spins. By focusing our attention on finding breakout stocks on the underlying stock itself, right? Selecting the option is the simple part, as we just did, right? So we actually set this up to execute automatically, which I love about this. So we don't have to be in front of our computers to execute these trades. So I'm just going to set this up. So this first order is the entry. Okay, so I'm basically telling Thinkorswim to only execute this trade if Bark marks at or above 1091 tomorrow. Has to happen tomorrow. Then if it does go live, I'm going to have a stop loss and a profit target already set up. And that's what I'm doing now. So that was my stop loss. This is my profit target. So market order, good till close on this contingent order, which is going to close out the trade when we hit 1283. Okay, so that's a profit. So when I hit this button, I got to save this so I can send this out to everybody. So this is how you read this. It's an if and statement. We're going to buy 10 contracts of Bark, the 20 August 21 expiration, $10 strike to open only on the condition that Bark marks at or above 1091. That's only good for tomorrow. If it doesn't hit tomorrow, this trade will automatically cancel. If this order triggers, these conditions are met tomorrow, trade goes live. Then I'll have two bracket orders. I'll have my stop loss managing drawdown, and I'll have a profit target. So if it goes live, we'll sell if Bark marks at or below 961. Okay, that's my stop loss. That's below. Then I have another order on top that will close out that trade if Bark marks at above 1283. These are only live if the first trigger gets met. Hands free. So then I just send it to the old broker, and there it sits right here. There's our Bark trade. You can see it's pending. It's waiting there for the market. It's waiting for the market. Just sitting there. This is a fit your lifestyle type of trading. Now, you can also do it manually. You do not have to set it up the way I just set it up. You can literally sit there, pull up your charts and watch it. Oh, 1091. Let's go smash the old keyboard and get into the trade. You can do it that way too. Okay, so if you don't have this ability, then that's fine. Because I love this format and I was at a different broker, like I said, I'm not associated with any broker. I'm not an affiliate of any broker. I would move to TD Ameritrade just to do this type of trading. If I had the wherewithal and ability to do it, I would just switch over here because it's such an empowering way to trade. The majority of these trades will trigger within the first hour of the day, if they do hit. So to give you an understanding, right, we've been running this program, the Options Profit Generator, sent out over 100, and it's got to be 125, 130 signals to date. Collected over 2,900% in total profits. This format here, this very trade that we just did today, I'm sending out. After the event, I'll send this to my team. We'll get this emailed out, text message, SMS out to everybody that's a subscriber of the program, okay? The level of transparency we deliver to you is exactly what we just gave you, okay? So to give you an example, let's say we had a Mogo trade this morning go out. This is the level of transparency. So we give out this level of data behind our signals. So we tell you what the symbol is. You basically copy and paste it, okay? Symbol, so here's an INO trade. This is from June 7th. 96% profit, 2 days, okay? 2 days in the trade. Got in at $1.86. 2 days later, sold it at $3.65. We give you the expiration month, strike price, stock price trigger, stock stop loss, and the stock profit target. We also give you then the actual trade so you can see visually how exactly we just set it up. Okay, I've never seen a program like this. So that way you can go over and set up your trades just like we set them up. In fact, SMS full detail, I'll show you an example of what it looks like. You'll see the exact setup, what the emails look like. And if you can follow directions, can you follow this? This is that INO trade I showed you earlier. This is exactly the level of transparency that I just gave you in today's walkthrough, right there. Every day we're evaluating and look at the market for you in the Options Profit Generator program. And you can see it all here. Do you know what to do? Of course you do, right? It's all right there. You just go then, put this in your trading account, and you're done. And I've never seen a company with this. And we don't manipulate. We don't come in and say, oh, time to close it all arbitrarily. No, it's, your profit target going in, your stop loss. We don't mess with it. You set it and we go by the process. If it wins, it wins. If it loses, it loses. We're on to the next one. We always have a stop loss to mitigate that risk. Okay, so that's the process that repeat over and over and over again. Okay, so that's the level of transparency. The same way we just did this, I'm going to send out Bark just like you saw it. So everybody that's not in this class tonight will be able to go get it. Okay, but this process I just went over, I know it may be, off the wall. You never thought about the way I just walked through the market. I challenge you to take that checklist and just apply the indicators on the charts as we did tonight. And I promise you, it'll change your perspective on how you're evaluating the different patterns, okay? Understanding what stage we're at. Are we in a pre-breakout, active breakout, post-breakout? Are we uptrend, downtrend, are we sideways? Then start to associate the volume with it. That is where we get into a whole nother world of insight and knowledge. So I've got a lot of questions on the program. Look, the program is $399 for the entire year. For the entire year, okay? So, and the reason we're able to provide that pricing is because we have hundreds of subscribers. So with that, we're able to decrease the cost coming in because we've got the power and the benefit of the masses following. But I always get questions about stats. These are the stats of the program. So if you want us to do it for you to generate these specific trades, then you can do it and we'll help deliver you signals like you just saw tonight, but we do it every single day for our traders. Track, trade, follow, and then we have classes to help train the process. So just since August, we've combined and captured over 2,900%. So how do you read that number? That is a multiple. It's a multiplier. The simplest way to understand that number and the impact to you personally is to think about your average investment size. When you're trading options, you trade $1,000 a trade, $2,000 per trade, maybe $500 per trade. If you followed our program since we started this version back in August, over 2,900%. What that means, it's a 29x, 29 times multiplier. So easy math. So if I average $1,000 per trade, I would have $29,000 in profit. That's how you use that number. If you're trading $2,000 per trade and you follow these signals, that's $58,000, $59,000 in profits. Okay, so it's a multiplier. If you want to take it to a monthly basis, that's 3.3 times your average investment per trade, or 330% in total profit. Everyone's gonna be different. Everyone has different investment sizes, different capital, but that's how you quantify percentages. Average hold time's 19 days. That's from entry to exit, on average, over 130 different trades, 19 days, less than 3 weeks, their average hold time. What I love about this program, as I mentioned to you, is the average contract cost is only $171. Low priced option contracts. They're not cheap, they're just lower priced. Okay, so it allows for flexibility to follow along with the signal. So you could trade one contract if you have a smaller account. You could trade 10 contracts, 20 contracts, 30 contracts, 40 contracts, 50 contracts. It's all based upon your comfort level, right? And so what happens is we follow this process. So if you want to learn to do this yourself, you're going to quickly be able to pull up the symbols, go to the charts, and see exactly what we see to reinforce the 4D trading. Also, it opens the door so we can help you across your journey to achieve your success. So we analyze and send you alerts of the next potential trade. That's our promise. Your promise is to get the trade, to log it into your trading account, and then set them up, following exactly what we give you. That's your promise. So we meet you halfway. We'll do the heavy lifting. We'll search. We'll find it. We deliver it to you. Now, if you just want us to do it for you, you don't want to learn how to do the technique, then just take our trades. Nothing wrong there. If you want the trades and you want us to help teach you this, then you show up to our classes that come with this, okay? So twice a week live. So once again, this is the level of transparency. There's nothing to guess, nothing to assume. Everything's given to you up front. There's nothing done in the background where you can never match up our results. I know if you've been a subscriber to any other news alert service that you've seen programs like that, where they say one thing, they show one thing, but then you're left wondering how do they get that result when I was there, I followed it, but I didn't get the same result. Okay, that's why we give you everything up front. That's a sample of the text message. That was a Nokia trade. I think it was an 85, 90% trade in one day. But that's the type of information you get. Can you follow those instructions? All right, all laid out for you. This is an example of Kraft Heinz. This is how it works. We send them out the night before. So this is Sunday. Sent it out for this trade on Kraft Heinz. This was on May 2nd. We sent it out to buy the long call, July 16th expiration, $40 strike price. So the entry we end up with was $2.46. That trade means it triggered the stock price on the 3rd of May. That's how it works. So we set up just like we did tonight for Bark, right? Contingent order. It filled for Kraft to take us in. Well, on May 24th, we hit the profit target over 100% on the trade. So entry to exit is what we look at. So how do we focus this, right? Remember what we're doing. We're cutting through, looking for the 1 to 2 best optionable stock. Now we're only looking at that small subset of stocks that have the most percentage profit opportunity, those smaller ticket prices, right? And we're looking for that 1 to 2, right? That's what we're looking for. And so at the end of the day, I want you to be empowered so you can follow this process on your own. But hey, along the way, some people need training wheels, you need help, you want to make profits while you're learning, and that's where this program can help you earn while you learn. Because every single week, twice a week live, I'm with you and I guide you through the markets. We walk through the strategy together. So that way you can get trades delivered and you can also learn as you go in this program, right? So once again, this is the concierge. So think of this as a done-for-you solution where we do the research, we're doing the hunting and pecking, and then we deliver them to you following this formula. And then over time, it becomes second nature if you want to learn it, right? Some people want to learn it. Some of you just want to take the trades and go and not mess with it. That's fine too, okay? But I just wanted you to be able to walk away with real, tangible strategy. And I hope I answered that call and hopefully lived up to my promise. If you want VIP concierge level service where we do this for you, that's what this program is, okay? So we run through, we search the data points, and then we deliver symbol to trade, option strategy, expiration month, strike price. Then we tell you when to trigger, when to take profit, and how to manage your stop, okay? Every single time we deliver this to you. So with this program, this is what it entails. It's very simple, easy to understand, easy to follow. All it is us doing this strategy for you over and over again, delivering the formula to you, okay? So the program is called the Options Profit Generator. These are the key stats that people love to see and love to use right here, okay? It's a multiplier. I've got a question on win-loss ratio. It's about 62% profit, meaning winning trades, winning versus losing. Average win is a 72%. When we lose, the average loss is 28%. Okay, that's what the stats are on that side. All of this I already mentioned is $399 for the entire year. Okay, so literally in an entire year, we've done this version, this program since August, this low cost format, 120 trades in 10 months. 12 trades a month. So you're talking 140 trades. That's what, $3 a trade? $3 a trade. Plus, not only just the signal, how many are going to pay $3 a trade with a 62% accurate profit track record? Average net profit per trade is 30%, 31%. Every 3 trades virtually doubles your average investment size. Every 3 trades. For $3 a trade. Okay, so ROI is there. Not only is it just the signals, you're also going to receive access to my live trading and training sessions twice a week live. This by itself is worth hundreds of dollars, thousands of dollars throughout your year. Okay, just here. Every Monday at 7, every Thursday at 10 a.m., I'm with you for 90 minutes, walking you through the market, evaluating signals, reviewing post signals, teaching you and transferring even more knowledge than you started with. This by itself is worth way more than the $3.99, but you'll be the judge of that, okay? But I always want to overshoot the value proposition with you. So 90 minutes a session, that's 3 hours a week, right? That's literally in a year, 52 weeks, right? That's massive, massive content and value to this program, all in the hopes of helping you accomplish your financial goals, right? So the reason we have this price, I know a lot of you thinking that's crazy, because we deal with the masses, all right? So you have access to me every single week, twice a week live, plus we're gonna hand deliver to you trades all throughout the week. Every day, we analyze trades for tomorrow. So to sign up for this program, it's simple. And we also take the risk away. We give you a 60-day money back guarantee, 60 days. So if you think about how many trading days in 2 months, all right, so let's just do 5 trading days a week on average, 8 weeks roughly, right, in 60 days, that's 40 potential trading opportunities. Let's say 80% of them hit the entry, okay? So you're talking 30 trades. You think you have enough time to evaluate if we're helping you or not. So you have 2 full months to go through the program. And if you're not satisfied or you don't see the light at the end of the tunnel, whatever your criteria may be, we will give you 100% of your money back. There's no checklist, nothing to qualify for. All we ask is that you let us know within the first 2 months. Ideally, you wait about a month just to get a sense for how this works, but hey, it's up to you. All you have to do is email us at support@concordiafinancialexchange.com. If you're not satisfied within the 60-day window, we will issue you a 100% refund. So I'm going to take away the risk. That's how confident we are in this program. And we're going to provide you even more value by giving you an opportunity to join us as a special bonus. You don't have to charge anything or pay anything extra for my live classes at this moment. Okay, so I'm going to include that. So if you lock it in, you're locking it in for the year. Normally, if you do on a month-to-month basis, you'll pay over $700, $800 a year. But by locking in the whole thing at once, you get access to everything. So all you have to do to sign up is go to optionsprofitgenerator.com and sign up. And you'll be able to access all of these signals. But more importantly than that, sure, I love getting the signals out to you. I love trading and delivering them to you. Our team here loves putting them together for you. But what I really love doing is working with you side by side, shoulder to shoulder in the live markets, actually breaking down even further this education we've gone over today, right? And that's what you unlock with the purchase today. So as long as you maintain your active subscription with us, you can join us in our classes, right? Twice a week, every week live. So all you have to do, once again, go to optionsprofitgenerator.com. It only takes a few minutes to sign up and get your trade today, and then get tomorrow's trade and the next day, so it's a simple process to get up and running. I already showed you the level of transparency. When you log into the membership area, you've got access to this trader's dashboard. You can go back if you're a data miner, you want to go see every single trade, go back and see every single trade. We got them all tracked. There's nothing to do unless you want to go through all the data. Every single trade ever sent out, ever executed is in this big old dashboard. You can export it. You can run through whatever analysis you want to do. All the data is there. That's how transparent this is. To give you an idea of what you have access to inside of our membership site, you simply log in to our Market Pro Live tracker. Inside of there, you're going to have all of the training videos about how to set up the entries, what all the various profit targets mean, how to trade the targets. You'll have access to all of our archived webinars. So this is what it looks like when you log into the platform, to our actual membership area. Here's our sessions twice a week live for you. You have our videos, how to set up different Forex trades, how to set up option calls and puts, how to manage stop losses and profit targets, how to set up the OCO trade signals that we set up today, how to utilize stock profit targets and stop losses. You have all of the trackers down here. So that's that same tracker I showed you earlier. So you can see all the positions and follow along with us there. And then you also have all of our archived classes here. So you go to webinars, it'll take you to our archived room. So here's our sessions. Here's our previous 8 recordings here for you. So we're always on top of the market, always providing this information. You can go back and watch as many as you like. all in all four, only $399 for the year. Yeah, so I got some great questions coming in. All right, so I got a question. How long do you until you cancel the trade for Bark? It's good for the day, so it's only good for tomorrow. If it doesn't hit 1091 tomorrow, then it's going to cancel itself. If you set up the way I set it up. Okay, so good for the day. That's all it's good for. Yep, all it's good for. This is the cadence. It's always the what happened today, let's set it for tomorrow. What happened today, set it for tomorrow. Now, as we get into the live market, so for Thursdays, right at 10 a.m., we're in the live market on purpose. So instead of looking at daily, we're looking at what happened in the first half hour of the day. What happened in the first half hour of the day on Thursday? I'm going to teach you how to take advantage of it for the last half of the day. Okay, so we're going to kickstart the day, and then we look at that data to say, okay, how do we take advantage of the next move? So that's why we have 7 o'clock on Monday, so I could show you what happened on Sundays, so we can get set up for the week. All that, that's what we had last night. And then Thursdays at 10, that's so we can take advantage of the live market. Great question. Yeah, so the website is optionsprofitgenerator.com. I posted it in the link. Got a question on how to access the link. So it's in the chat box. You know where I sent you that checklist? It's right there, but it's on the screen too. Optionsprofitgenerator.com. It takes you right here to this page, optionsprofitgenerator.com. And when you scroll down, you'll see how to get started. You can just click here on the green button. It'll take you down. Simple first name, last name, email, phone. We got to deliver it to you, right? It's a trade alert service, so I need your information. Billing information's here. $3.99 a year. Lock it in. Cancel. Modify your order. Here's your support ticket there. There's your support ticket there, and you're ready to go. Okay, so 60-day money back guarantee. As soon as you subscribe, you'll receive your welcome email, your access to the platform, the membership site. You already know tonight's trade, so you're good to go tonight is Bark. Okay, so you already have the trade all ready to go. I love how somebody commented they made 20% on a trade from 2 weeks ago, so I love that. Hopefully that paid for your subscription, right? But it's for the whole year, right? So if you like the concept of what I taught you in the 4D, then give us 60 days delivering them to you. You know, if you like it, you like it, you keep it. Keep getting the signals. You don't like it, get your money back. I mean, it's as simple as that. I mean, there's nothing more cut and dry than it's either making money or not, or you like it or you don't like it, or you get it or you don't get it. I mean, I've done this for 13 years. There's no strings attached. Either there's nothing to qualify. I hate those programs. It's like, oh, I want my money back. Oh, here's 50 things you got to do. That's just not, to me, that's just not appropriate. So as you can tell by the transparency here, we don't mess around with that stuff. Okay, it either does or doesn't. You either like it or you don't. It makes money or doesn't for you, and that's all we can do, right? What I got a question on, you know, how do you maximize this? Well, is to take the positions. If you have to, I'd rather you lower your average investment per trade and take every trade than try to cherry pick. We're already cherry picking. So if you think about cherry picking the cherry pick, we're going to experience losses. We're not going to, there's no one that's 100%, not at the volume that we send out. We're sending out trades every day. There's impossible to be 100%. If you're cherry picking against that, you may cherry pick and happen to just fall into the ones that lose. So you can't, I mean, you can do what you want, but you shouldn't cherry pick. We're doing the cherry picking. So to get and maximize the results, you've got to trade with us. So if you're trading $2,000 per trade, then, and if you can't handle 5 or 6 open positions, then it's better just to decrease the number of dollars per trade so you can hold the trades through fruition. To get it to 19 days, what that means is that when we're winning, it's taking longer to hit the target. Because when we're wrong, we want to cut and run. So our stop losses, if we're wrong, we want to limit the loss. So we want to be out faster on the loss. But when we're winning, we want to reap that profit on the way up. That's how we can generate 100% profits and more on those winners, so we can generate that time in trade. Because it's like marinating, right? If you marinate your steaks, we had fish tonight I made on the flat top grill, nice little tilapia on the flat top. I marinated it. Why? So I get more flavor out of the fish. It's a white fish. It's a bland fish unless you season the heck out of it, right? So I combined seasoning with a marinade, short marinade, 15 minutes. It was delicious. But I marinated it. I let it soak up the flavor. Okay, same thing with a stock and an option. We've got to have time to marinate the option profit. Okay, so that's why when we're winning, you're in those positions for more than 3 weeks, but the average in and out is 19 days. Okay, so just to give you a sense of the timing in trade, right? It always comes up. Yeah, so you got tonight's trade. We're gonna for those that just signed up, I see you. You're in. Bark will go out in probably 20 minutes. Usually it's 7 to 8, but tonight's my night. I'm in a presentation. We found the trade together. So normally the trade's already out. I mean, it's already out by the latest 8:30. But I'm with you, and it's my night on the team to generate the trade. So I decided to do it together. So we did it all live together. So Bark's the trade. If you sign up, you're going to get a special email delivery and text message. But we're in. You guys are in, and that's the trade. But it'll be updated in the tracker. You'll see it. It'll say June 29th, pending trade, Bark, with the exact details we just did together, with the exact screenshot we just took together. It'll be there when we're done. But you're in. No, what is that? I don't even know. I'm not even familiar with that. Trustpilot. I'm not sure what that is. Okay, I got the question on Bark. So not to cancel. If you get into the trade, but it goes sideways. So of the 120, 150, 130 trades, I think we're at now, maybe just shy of 130 signals we sent out. There's only been two instances where we ran up against expiration. Only two. So you're talking less than 1%. 1% of 100 is 1.3. So we're just over 1%, 1.5% of the signals went sideways and came up without hitting profit or stop loss. So for me, the rule of thumb is 7 days before expiration. So if we're within 7 days of expiration and we're not at stop or profit, then you just close out. But it's only happened twice. So you think about how many trades that is. That's 130 trades. Only 2 times we've had to have that happen. Oh, that's cool. Yeah, I have to look into that. I haven't seen that before. I'll check that out. Trustpilot. That's cool. I've got a question. How many trades should a person take each day? Is it good to only stick with 1 or 2? It's all about your capital. You don't want to risk more than 3 to 5% of your account size in any one trade. So if you got a $10,000 account, okay, simple math. Let's just use 5%. $500 per trade. So that's your risk per trade. You don't want to go over that number. Okay, so open positions is different. So if you think about, if I've got a $10,000 account, the most you want to have open to the market is a personal, are you comfortable with having 20% of that open to the market, meaning inactive positions, right? That means $2,000 worth, right? So it's going to be, a comfort level. How many trades you can actually place is all dependent upon your account size. Now, I'm not a CTA, so I'm not an individualized commodity and trade advisor, nor do I want to be, okay? That means I give individual advice. I don't do that. I teach concepts, I teach a strategy to the masses, and the same rules, regardless of account size, okay? I don't teach account size specificity, okay? So I don't say, how many do you have, Paul? How many do you have, John? Okay, you trade this way, you trade that. It's not how this works. So it's all about your average investment size per trade, and then that will back into what you can handle, right? So we'll send out trades a day, okay? But not every trade triggers. So if we send out 5 trades a week, we may have a week where all 5 go live, so you're in 5 new positions, or you'll see 3 out of 5, right? Every stock's different, right? We're trying to catch a breakout. We're being very specific. If it doesn't break out the next day, that means it's going the other way, so we don't want to be in it, right? So that's because we post every day. It doesn't mean you're in a new trade every day. It's got to follow the process. It's got to break out. It doesn't break, We don't want to be in the trade, right? So that's the checks and balance of the strategy and why that checklist is this long. So we have all those items checked, and it's got to match up to go, right? That's how it flows. Fantastic questions, though. I love it. Fantastic questions. All right, we are gone way long, and I do apologize about that. It's 9:11. Holy cow, it's been 2 hours. How time flies when you're having fun. I know I went over a lot. We will have the recording sent out, so you can go watch the recording. I know there's a lot to chew on. I sent out, everyone's got their checklist. We'll also send the checklist out in case you didn't get it. If you want us to do it, that's what this program is. But if not, this strategy, you keep showing up to these events, you're going to see me run the exact same strategy every single time. The same one. So you're either ready now or you're not. And I get it, and that's fine. We'll be here when that time is right. If you are ready, I see a lot of signups. I'm looking forward to working with you all as well. And I wish you nothing but the best. I want to wish you all happy trading. At this point, I'm going to say my farewell for the night. Enjoy your rest of the evening. If you still have a rest of the evening, for me, it's getting late. For those that signed up, you should have your welcome email, and you'll have tonight's trade call in the next few minutes. All right, so I do appreciate everybody. Thanks for the comment. I'm glad it's refreshing. You know, I like to do things a little different in my experience in this industry. All this information, everything I went through tonight, TradingView, we've got more resources we give out for free using bar chart. There's just so much information free. Most people just don't know how to put it together, right? So rather than me putting up this massive paywall, it's all out there. I want to sleep at night. I want to know when I put my head down to sleep at night that I've delivered, right? And I can do it with all the beautiful feelings that come with that, and then just recharge and restart tomorrow. If you guys like this, then you guys can subscribe to this program, and we'll deliver them to you. You can look at it as a token of appreciation. You can look at it as an added value service. I don't care what you look at it as. I wanted to deliver for you as promised. So appreciate you all. You have an amazing strategy at your fingertips. You have the checklist. You can come back and see us. We appreciate it. Thank you for the questions. I made it enjoyable. Happy trading, and I'll see you all in our next live event. Thank you all.